So Srinath, we were in the previous segment, we were talking about cargo being replaced and how there could be security, and we talked about a digital or using today's technology, IoT and GPS and so on. How could there be security? The Singapore company's name came back to my mind. Ascent Solutions. Ascent Solution is the name of the company which provides these for the high cargo. Anyway, let's move to some of the other issues in major geopolitical events which are impacting trade, which have impacted trade related matters in the recent years. Three that come to my mind. I mean, we'll have a separate question on the pandemic, which you also sort of alluded to in the early part. Three things that come to top of my mind, and you could elaborate on each of them. One was the trade war between China and the USA. Second was Brexit, EU, and the third was RCEP. Right. So, in terms of relevance and importance to trade finance, I leave it to you to pick and talk about any of the three, all the three, and so on and so
forth. Sitting where we are in Singapore, that's basically being outside US and outside China. Mm-hmm. The trade war was wholly disruptive.
Yep.
It disturbed supply chains. It caused delays in deliveries of goods. Mm-hmm. It, of course, led to higher costs at the consuming level.
Right.
One of the good outcomes perhaps was the realization on both sides that there needs to be a rebalancing. Definitely on the Chinese side, there's been some recognition of that, is what I believe. But overall, the sledgehammer approach of increasing customs duties, import duties, and using that as a lever to reduce flows of trade, I think was backward and wholly disruptive, very detrimental.
Right.
One of the outcomes was that some companies, fearing that there'll continue to be tension between the US and China for the long term, have already moved some of their supply chains out. Mm-hmm. But I choose to believe that the reason why they've done it is not has been triggered so much by the trade war between the US and China, but because costs were getting higher in China.
In China, true.
And there were, of course, cheaper sources available. So we hear a lot about some of these manufacturing and value addition operations moving to places like Vietnam.
Vietnam, yeah. Which, at least from a China plus one, right? It's not that they are hollowing out of China, but China plus one at least.
But Singapore in particular would have, has in fact suffered because of this. It's wholly unwelcome, the disruption. So not a good thing overall. And I don't know to what extent America has benefited from it.
Yeah.
Apart from creating the wrong type of waves in global markets. Overall, I don't believe they've really benefited from it. As far as Brexit is concerned, that is another event. When I think about Brexit, before that, there was discussion about whether Scotland should go independent.
Correct.
And I have a personal, should we say, affection for Scotland because my daughter studied in Edinburgh.
Okay.
So I used to visit Edinburgh very frequently, and I still go there for holidays as frequently as I possibly can, which is probably once a year under normal circumstances. But now, of course, it's much longer than that.
Right.
And so I have friends there, and Scottish people who would ask me, what do I think as somebody, a complete outsider?
Right.
And I said, look, in the world that we live in, we talk about globalization. And yes, globalization is not a popular term in every quarter.
Right.
Because it has led to deep divides in society, where some have hugely benefited and then many have been completely displaced. But the world is become, with the advent of the internet age, is going to get more connected.
Absolutely.
more collaborative, and you have to stop thinking parochially.
Exactly.
And I said, going forward, I don't think it will serve Scotland's interest to be not part of the UK, because UK brings its benefits. It has its heft in the world affairs and the economy, finances, the role of London as a financial center, as a business center. So at that point, I had suggested that I would, if I were Scottish, I would vote for Remain.
Right.
Within the UK, and results turned out that way. So I heaved a sigh of relief that it turned out that way. And then Brexit happens.
Right.
So on the one hand, I do understand the emotions of certain parts of the British community, which believe that they would not like to be ruled out of Brussels.
Mm-hmm.
They want their independence. It's interesting that the British think like that, considering
I was going to say the same thing. You spoke
the
exactly
history.
what I was going to react.
But anyway, that's history. But the point is that, in this day and age, we should be getting closer to other regions, other parts of the world,
not farther,
and
right?
not trying to separate ourselves. So I don't think Brexit was a great move. Ultimately, the world will sort itself out. Britain will sort itself out. There are some initial teething troubles in terms of the channel trade that's going on right now. There are problems in terms of visas that will be required by certain citizens to move into the other country. The free movement of people from the EU to the UK will now be
right.
stopped or restricted or whatever, will be controlled. So from a very small scale perspective, yes, it might appear that the benefits are good, but long-term, big picture, again, I don't believe Brexit is the best way forward for the United Kingdom.
Absolutely. I agree with you.
So is there anything else I missed there?
Yeah, we'll come to that, but you've given us a good macro view on how the reconfiguration of the supply chain is taking place in the East, and probably in some cases there may even be reshoring that is pulling some businesses back. But like first have been the China plus one kind of a thing. You talked about reorganization of some of the businesses, as an impact of those. So those got. I just wanted to ask you, and if it is there is no impact, then you can say, and that we can move on. But before we come out of this topic, just wanted to ask you, for these two, are there any specific trade finance related implications? I guess London's, if it diminishes as a financial center, there would be one, related to trade finance. But what else? Are there anything related to that, or trade finance just has to reconfigure itself and move on? And
well, I'm not sure whether Brexit changes London's position as a trade finance center. That's not clear to me as yet.
Okay.
In certain aspects of the financial sector's dealings, yes, you need to be domiciled in the EU in order to be able to deal with EU clients. But trade finance, I am, as I said, not clear whether that sort of change is going to occur.
Right. Okay.
And the fact is that London is such a large base for trade finance that
that's why I asked the question.
Although there are other very important locations for trade finance, like Geneva, Rotterdam, Amsterdam, Paris.
Sure.
So despite all that, I overall, if there's going to be this separation, it will have some impact, at least in physical terms, flows of goods and services.
Mm-hmm, mm-hmm.
So there could be an impact on the trade finance opportunities out there, but we don't see it as yet. Life goes on as usual, and banks are watching,
mm-hmm, mm-hmm.
and before they decide one way or the other which way to go.
Mm-hmm, mm-hmm.
I guess it all depends on how important European business is,
right,
for them, and the type of connectivity that Europe provides them to other parts of the world or wherever they are from. So.
True. One more, the third one, other than China, US, as well as Brexit, EU, was, do you think RCEP, which happened, more in our backyard in Singapore, has that Would trade finance be impacted? Trade in general can be impacted, but anything else that would benefit Singapore, Hong Kong, the countries in the region from a trade finance perspective?
Hopefully positively, with more trade occurring. So, we were just talking about Brexit, and we were talking about the America First policy or the China-US trade war. That's moving in one direction, and completely the opposite direction is RCEP.
Correct.
Which is looking to open borders, do more trade, have more relationships. So all told, that should have a positive impact on trade finance generally, is what I'm thinking. But I think the big story is that India is not part of the RCEP.
Right.
And yes, there are economic and political considerations for that, particularly in light of the current crisis, the farmers' crisis that we are witnessing happening in India. So that's a sector that clearly has to be, their future has to be taken into account when India positions itself as part of a multi-country agreement.
Right.
But I'm hoping that India becomes part of RCEP as soon as possible, whenever that is feasible, whenever the more wiser people in the world decide that's the right thing to do, because you really can't exclude yourself from these arrangements, because you then allow for the setting up of barriers.
Right.
And that is all in all not a great thing to do. So that's really where it is. And so the impact again is not visible right now. It's too soon. But the RCEP on its own, I think, will be good for trade finance.
So yeah, that's good to hear. So you would say that like if the countries which are out of it or choose to be out of it, when these countries within the RCEP, they would think about trading, considering which countries to be, relocate their businesses or to do some other trading, they would choose one which is within the area, right? Or even those from outside, from Europe or something, and they would choose to be routing their businesses through one of the RCEP countries rather than one which is outside, right? To address the Asia Pacific and
purely from a trade perspective, I think the benefits are predictable.
Sure.
But investment flows and future expansion, internationalization, these are things I'm really not equipped to speak about, because again, it's too early.
Sure.
And I haven't read chapter and verse of the RCEP. I'm just relying on public reports of it.
Sure.
But again, every country has its own pattern of trade. India, for a long time, was focused on the West, Western markets. Then when the Middle East started waking up and becoming very prominent, with the Indian diaspora expanding to that part of the world, that was something that grew in significance in terms of India's trade. Then, of course, oil has always been flowing from the Middle East to India. Then Africa has been traditionally a very low-key trade that India has had. Even now, China makes waves in Africa. Big landmark projects that are very noticeable. India's relationship with Africa has been far more low-key. And I see the big difference is that China's push is government-driven, whereas India's push has been private sector-driven. So individuals have been, going out. Of course, we also have Indian government companies and the Exim Bank intervening with their own facilities, etc. But all in all, China is the one that really makes the biggest splash. And I guess I'm speculating here, India might have at some point considered, why don't we do something comparable with China? And probably India has decided that, no, we'll do things our way, because it works better for us this way rather than doing it or copying what China does. So that's really where it is.
So, let's address, the elephant in the room. You alluded to it, the COVID pandemic, and it's, how has it affected the fortunes of the trading sector? You started, you made some observations at the in the previous segment. Let's dive a bit deeper into it.
I think it's been a very strange year. Speaking for me personally, I did very little of my training business during 2020. Part of the reason was my own miscalculation. I thought this pandemic will pass earlier than it has prevailed. Second, I was thinking that delivering training by virtual means, by being in a remote location and not face-to-face with a group of people, will impersonalize the whole process of delivering knowledge. So I had a few starting problems, but it took me a few months to get over that. And now I fairly routinely actually deliver training over Zoom.
Right.
The reason I say fairly routinely is because I have some academic engagements here in Singapore where I do face-to-face. So I have to wear a shield.
Yeah, we all do that. Yeah.
And keep my distance from the students.
Yeah.
But it's in a lecture theater. It's at the university premises, etc.
Right.
So it's been that way. It's been in some ways traumatic and in some ways very hopeful. When I think back 2021, there's been a natural sense of optimism about how things will turn out. So I can report that my business has revived. So that's why you probably see a little more relaxed look on my face.
And just to add in the context, right? Since you know that I also teach in the university. We last year we went completely on Zoom or completely virtual, and teaching 50 students at a time completely. You are your own orchestra, one man orchestra, and managing the tech and the discussions and. But today, not only there is certain places we can do it to face, but there is also this is happening, and which is I also feel that maybe the future of things to come is blended, which means large classes are obviously like 50 or more people are not allowed in Singapore to be in the same place. So those classes are split into two, and half the class is virtual and there's a camera they're on Zoom, and half the class is in person. So we are and you wear the shields, etc., like you said, and we are simultaneously coping with both, right? And teaching both so half the class virtually, half the class in person, and so on and so forth.
Yeah, I mean, in the training space, there are differing requirements. Some clients require face-to-face, some clients require virtual, some are flexible. But anyway, going forward,
I think go to the trading sector. They are also have to juggle these kinds of blended situations going forward.
No, I mean, if you've been reading recently in the newspapers, there was an article in the Business Times about the problems in the container trade.
Right. Okay.
So there's been a dislocation of containers where, for example, container rates have shot up dramatically in the Far East.
Right.
Because of a shortage of containers. And meanwhile, there's a pileup of containers in some of the Western ports.
Right.
So supply chain disruptions because of shutdowns, restrictions in people congregating, work processes being disrupted, etc. So that's a reflection of the impact of the pandemic,
right?
Which has caused these disruptions. But speaking more generally, again, it's been a very interesting commentary coming out from different quarters. For my friends in the grain trade, some of them have said it is their best year ever. 2020 was their best year ever. I guess, I don't know whether all of us spent our time baking cakes.
Which
that's why
at least good number did.
Grain volumes went up, or we started eating more grain, whatever. So you have cases where the property market has also, shall we say, shown pockets of growth. Then just look at the Bombay Stock Exchange Index. the levels it has reached, never before has BSE gone, as I recall, over 50,000, and it's traded above 50,000. And NSE has also gone to levels that we never imagined. So is that partly because of the stimulus that that countries are giving? Is it because there's greater trading interest? And of course, it's also because corporations have had turned in good results. So you've seen that side of it. That's the positive side. And then you keep hearing about businesses collapsing, putting people out of employment, tragic stories that you hear even in Singapore.
Absolutely, yeah.
So it's really very difficult to say whether it's been a good. It depends where you are in the spectrum. But clearly, it is something that that was something we were not prepared for.
Right. And, you mentioned about the container shortage and that has severely impacted the freight rates for containers. And, earlier segment, we talked about the 180-day cycle for trade finance and, because that's, essential for the trade. And then, whatever budgeted, would all change. And now even the bankers and the borrowers have to sort of sit down and recalibrate and talk it over, right?
Yeah, those conversations are also changing because there are lots of moving pieces.
Yeah.
Businesses have to re-strategize. In some sectors, it's easy to contract, but it's not easy to obtain delivery. In some sectors, it's easy to receive goods, but it's not possible to distribute it domestically.
Right.
So a lot of changes. And then when it comes to value addition, reconfiguration of supply chains is occurring. There's some reshoring that's happening, or the near shoring is happening.
Right.
So we are all reacting to what we see in front of us. And we're trying to be as responsive as possible to the situation that each one of us is individually facing.
True.
Are we making grand plans for the next 5 years? Yeah, probably at some level we might be making grand plans for the next 5 years, because there are some things that we can say going forward is definitely going to be the change. But there's a whole amount of stuff that we don't know. And so businesses are really taking it day by day, month by month, week by week, or quarter by quarter, and not committing themselves beyond that is what I see when I talk to people in the business sector and the trading sector in particular.
Right. So that gives me a perfect context to ask you this. Let's talk about risk versus uncertainty. And you could elaborate in the context of international business, international trade. Okay.
So if we were to try to define these terms, very often they're used synonymously. But actually, there's a very distinct difference. If I were to give you a textbook definition, we refer to risk as a randomness that follows an identifiable distribution. That's what makes it measurable. That's what makes it priceable. That's what makes it predictable. You can attach probabilities to it and so on and so forth. Quantifiable in many respects. Uncertainty is defined as a randomness that does not follow a discernible distribution. So just look at our recent past. The pandemic, would you classify that as risk, or would you classify that as uncertainty?
It threw in levels of uncertainty, which I would say is level 3 uncertainty.
Yeah, I mean, nobody, as I said, planned for the pandemic.
Right.
And nobody had any sense of probabilities. We know our historical record of pandemics occurring.
Yeah.
But nobody imagined 2020 is going to be the year. And even when travel began to shut down in early March, the belief was, okay, in 2 months, 3 months, it's apparent from government policies around the world that in 2 months, 3 months, everything will be back to normal.
Yep.
Perhaps because of our experience with SARS,
Mm-hmm.
where personally, again, and for a lot of other people, life wasn't disrupted.
Mm.
But yes, we were a little more hesitant to use the MRT. We were a little more careful when we used a taxi or a bus.
Right.
But by and large, life went on. But for the tragic few who suffered the consequences of SARS, it was terrible.
Yep.
But pandemic was a whole new thing. So yes, I would put it in the side of uncertainty. And this is really, I think, a challenge for businesses. They can do risk management. They can do any sort of predictions on risk and have, shall we say, plans in place.
Mm-hmm.
But first of all, recognizing uncertainties of your business and how that uncertainty will affect you and what do you need to do in response to that. That is a whole different challenge. Because when you go back to 2020, the focus was not so much on business performance, it was on business continuity.
Right.
How do we keep the wheels turning?
Right.
And that was the big, shall we say, challenge that they were facing and groping with. Of course, now we've probably gone past that, and now we're thinking a little more expansively. So when we talk about risk, it's becoming an increasingly sophisticated practice, and it is something that many organizations are well equipped with.
Right.
Even in the trading side, we understand risk a lot better, both as trading companies as well as banks.
Right.
Financing trade, we understand trade. We understand how risk is an inseparable part of business.
Right.
But when it comes to uncertainty, we can be lost, completely lost.
True.
So
uncertainty is actually also an inseparable part of business, and of course, that's one of the things that I teach in my courses. But because I teach a course on VUCA, volatility, uncertainty, complexity, and ambiguity, and managing in that kind of a context.
So uncertainty must be a big topic for you.
Yeah, absolutely. And then we talk about levels of uncertainty, and like all uncertainty is not the same, and so on and so forth. So managing uncertainty is pretty important. So that also the discussion on risk and uncertainty brings us to the a related thing. We talked about price swings. We saw that during the pandemic. Otherwise, also we keep seeing that, and we talked about grains and other commodities. So, what have been the fallouts of these commodity price swings on trade finance? And because this has happened, it's not, we don't even have to discuss it only in the context of pandemic, because we know that they have been occurring time and again.
In cases where the prices have been on the up and up, trade finance lines have been busted, simply because they can't accommodate the same quantum in terms of value. But when it goes the other way, of course, it hits the producers. And I guess case in point is Africa.
Right.
When prices for commodities collapsed because there was a decline in consumption, it has usually affected the producing countries. And in many countries in Africa, commodities is a very significant part of their GDP.
True.
So when they start losing commodity revenues, it has an impact economy-wide, society-wide. And again, that can be very, very tragic.
True.
African economies are talking more about intra-Africa trade. They're talking more about value addition domestically before export. These are things that have happened, for example, in Asia. In ASEAN, it has happened.
Absolutely.
In EU, of course, is really very intensive. But developed parts of the world, that's not an issue. But other parts, it is still a challenge, because you have to invite investment flows to be able to engage in value addition and to do domestic production. Price swings is a matter of concern to people at many quarters, because it directly affects livelihoods. The poor, the individual farmer, the individual small processor, the trader.
Right.
We say traders like volatility. because that's what enables them to make profits. So traders theoretically don't like flat markets.
True.
Because how do you do buy low, sell high then?
Right.
But when you have very significant swings, particularly in the commodities business, and particularly a lot of the developing countries are commodity producers and exporters, the impact can be very, very painful.
True.
Because incomes just dramatically shrink.
Right. And we also saw that, when the grain prices shot up, some years back, the reverse was also true, right? That African countries were very significantly affected because people couldn't afford the grains and the millets and the rice and wheat and so on, and then the governments also have a budget constraint on how much they can subsidize and so on and so forth. Yeah.
Again, it depends. Even in the, shall we say, less developed countries or the developing world, when it comes to issues like food grains and all that, the government tries to step in. The local government tries to step in with some subsidies and stuff like that. If it's within, on the other side, if prices are collapsing, that is when producers at a small scale level feel the pain. And at that point, putting floor prices might be unaffordable for the government. And it may not even be feasible because of some of the trade agreements that they might have entered into.
Right.
So yes, we like to see volatility at a certain level, but are we all comfortable with wild swings? I think that's a question for each one to answer for themselves. But I would think that there are many people who would be very discomforted by very unpredictable swings in prices. And we have seen that in the commodities sector. For at one point, oil was trading below water. Grain was trading at levels that were never seen before. Copper is on the uptrend right now.
Right.
So
yeah,
there's always somebody who's gaining and somebody who's losing.
Right. And end consumer is looking for the Goldilocks, the not too hot, not too cold kind of soups, right?
True.
Thank you for joining us in yet another episode of Move Conversations. Hope you enjoyed this episode. Please subscribe to the Move Conversations YouTube channel and press the bell icon to get notifications of new episodes. Thank you very much. Till I see you in the next episode. Thank you very much. Have a great day.